All right, folks, welcome back to the Garden State Growth Show. Today we have a very special guest, Mark Olear. Mark, welcome to the show.
Thanks for having me. Thanks.
Mark, in full disclosure, is Jordan's uncle. I think Jordan Venmo'd him to come on here, but that's besides the point. Just add it to our invoice. No big deal. Mark is a commercial agent at Getty Realty Corporation.
That's
Did I
correct.
get that right?
That's right.
He's from Manasquan by way of Carteret.
Carteret, New Jersey, yes.
Shout out to Carteret. Greg loves Carteret.
Car's great.
That's an up-and-coming town.
Oh, yeah. See the Perth Amboy.
Mass transit,
Yeah.
just outside of New York. Mark, how long have you been a commercial agent?
Well, I actually been in institutional commercial real estate for coming up on 40 years now.
40
so it was
years.
right out of
Nice.
college. I got into the real estate business.
So this is the only job you've ever had.
It's the only business I've been in. Yeah,
Wow.
yeah. So I've been with Getty Realty now for just shy of 12 years. I'm the chief operating officer and chief investment officer. Getty Realty is a publicly traded real estate investment trust on the New York Stock Exchange.
Cool.
We are about a $2.5 billion total enterprise value company. We own just shy of 1,200 properties in 44 states. Mostly single asset retail properties that focus on the kind of automotive and convenience retail. So think of about 800 of those are C-store gas stations, about 200 or just shy of 200 are car washes. And then we own oil change facilities, collision centers.
You own and operate?
No, we don't operate. We're just a pure real estate ownership. So we own all the real estate. In the company's lineage, in the pre-REIT world, there was an operating company
Yeah.
that was went opco-propco, and the operating company was sold off many years ago. So the company that I work for now, the surviving company of the real estate assets, is a pure owner, and it's a true triple net company. So
Oh, so they own and lease.
we own and lease, so we don't operate any locations. Actually, by REIT standards, it's something that's separate and apart from the REIT structure. So these properties, we're fortunate enough to have, out of almost 1,200 properties, only I think today 3 vacancies. So we're almost fully occupied.
Wow.
We've got almost or somewhere around 200 different tenants. And tenants have anywhere from 1 property lease to upwards of 100, 120 properties leased from us. And
So wait, hold on.
yeah,
I didn't know this was a thing.
Yeah.
Tenants can lease a gas station?
sure. So we own the real estate, and they come in and either under an individual or a unitary lease, we call it, which is a form of a master lease, one lease covering many properties.
Oh.
They come in and operate as a tenant, and we are, when I say true triple net, we're an absentee landlord in the sense of positive. We're using that word. So we don't have any site level responsibilities for our properties, but for a very small piece of the portfolio. So
Are you building these gas stations, or are you acquiring dilapidated ones and fixing them up?
So it's a bit of a mix. The company, the real estate company, got started by taking the Getty portfolio. So we get questioned all the time about
Getty
the Getty
gas
name.
stations.
So it's the old Getty gas stations. Has nothing to do with the Getty family on the West Coast. We get that question all the time if we can get tickets to the museum
Greg's from
and
the
things
West
like
Coast.
that.
I am indeed.
This isn't about you.
Yeah. So the company acquired a name through an acquisition of some old Texaco assets when the oil companies were divesting. And that original portfolio was 600 or 700 properties. Most of those properties are still, about 400 of those properties, 350 of those properties are still in our portfolio. But in the 12 years that I've been there, we've acquired just shy of 600 properties for about $1.7 billion.
Yeah.
Sold about 200 properties that didn't fit our profile any longer. And again, so think of it as a pure underlying real estate owner, and we lease it out, whether it's a C-store, gas station, collision center. Like I said, we've gotten to quick service restaurants.
Is this just It's just tri-state area, United States? Like, how far out do you guys go?
We're in 44 states right now.
That's
So
enough. That'll do
Basically,
it.
the
So
whole-
not Hawaii, Alaska, and one other
You're
one.
going to stump me. No, Hawaii, we have a fair amount of assets in Hawaii, which
Why don't you live there?
no,
Mark?
I have not yet been able to get out and see those yet, but don't stump me. It's Alaska and 3 other states. So
We promised him only
Yeah.
easy questions.
Exactly.
it's Texas is our largest state by revenue, followed by New York and Massachusetts.
A lot of gas stations there.
Yeah, and also a lot of car wash, and we're like I said, we're getting into the all the other auto services, but anything that's kind of a single tenant retail, convenience driven kind of experience.
Awesome. So let's go back.
Yeah.
Like you started this, sounds like in 1986. I don't have a calculator.
Yeah.
But that's when I was born, and I'm almost 40, so
Okay.
I'm connecting the dots. Was that your first job, or did you have a job earlier than that? Like you can go back first job.
Okay. I was delivering newspapers. The
Perfect.
Oh, there we go.
That sounds like a first job to me.
The old Star Ledger, but no, I went to college in East Orange, New Jersey, to Upsala College,
Yeah.
and through that time, growing up in Carteret, worked through high school and college for Pathmark Supermarkets.
Okay.
At their corporate office in Woodbridge.
In
And,
college?
Through
Like
high
an
school and
internship?
college. Yeah, and I got an internship there my senior year.
Wow, most people don't do that.
I had thought at the time maybe I was going to get into advertising, some
Okay.
creative work, things like that. And they offered me an internship in what they call the market research department for the new store development process. So when Pathmark was thinking about a location for a new store, they would send us out, and we would do before internet, pre-internet, pre-phone, pre-Google. We would have paper maps, stopwatches, and tape recorders in the car, doing physical drive times. New person on the team sitting on a Saturday morning counting cars.
Wow.
Before there was internet traffic counts. And doing competitive analysis of the markets and helping the real estate team project sales opportunities.
What's something that's like often misunderstood about supermarkets that you learned while working there?
So the process of coming up with drive times, it was the about 70%, 75% of customers. It's a purely there's a lot of brand recognition that goes into it. People are loyal to, especially New Jersey, whether it's South Jersey with Acme or North Jersey with ShopRite, and you get Wegmans and people coming into the market. But typically, people won't drive more than 6 or 8 minutes to a supermarket.
Really? That's a
So
stat.
because in the densely populated areas where we live, there's no need to. So if you think about your drive to work, you probably pass 3 or 4 ShopRites. Right? So which one's closest to your house?
Gotcha.
So we would do the time drives and forecast the. It was called a gravity model, and the theory behind it. If you think of a retail location as a magnet, as you get closer, you get a stronger draw.
Right.
So the close-in population had a higher percentage of sales, and as you went further out, it would deteriorate. So we would sit there and would grease pencils and stopwatches and census tract maps and forecast the sales, and then we'd go in. What was really intimidating at first, but really educational, we would have to figure out what the competitor sales volumes would be. And
How'd you do that?
We would go in and kind of wander around. We had a couple tricks that would give us order of magnitude. We'd count time cards. There was a theory about how many employees per dollar of sales. There was how many registers can process so much sales. And then you go up to the dairy manager or the butcher or the produce manager and just start talking to them and say, how's this store do? And, if the produce department's, X percentage sales, what is your sales? And people tend to like to share the information. If they're proud of their department, they'll tell you.
Or if they're slow.
Or if they catch on, they throw you out. And we'd come up with some volume forecasting for the competitors and total share of market and slices of the pie and things like
Where do
that.
supermarkets make their money?
So put me. You say you're gonna put me on the spot. I've been out of the supermarket
Generally.
business. So
Back then.
if you think about the perimeter of the
Okay.
store, it's there's a reason why the milk and the eggs are always in the back.
Right.
You have to walk through the entire store to get to them. So you're gonna pass the.
I
chips.
noticed that, Greg.
Anything at eye level sells more than anything at feed or above level. So the perishables, the dairy, the produce, the meat. Those are the.
Were you negotiating? Were you ever a buyer for the stores?
No, it was really on the real estate side, and that lasted for a year or two after college.
Gotcha.
Had a really short stint with a family development company doing some research for them. But then I got really lucky, probably got a role beyond my experience with Toys R Us
No way.
up in Paramus. And was
Rest
there.
in peace.
Yeah. You take
Let's come
Pathmark.
back up now.
Nah, they should.
There comes back.
Yeah.
Are they really?
Yeah.
Yeah, they're trying. I think they're still out there trying to license the name, but
Gotcha.
So I think that was 1988. Joined Toys R Us and was
Shout out to
lucky.
88.
That was peak Toys R Us. That was peak Toys R Us, right?
We were
yeah.
cranking out, I don't know, 100 stores a year or something like that.
Oh my God.
Yeah, and
Ground up.
yeah, that was all ground up development, and I was the new kid on the block, literally. So they gave me I had Buffalo, Cleveland, Detroit.
Oh,
Toledo.
you were going
Yeah.
that way. Okay.
Yeah, we were based in Paramus, but we handled the whole country out of
Yeah.
North Jersey, and just went out and started to try and find some properties for Toys R Us, and learned how to craft a deal and do an acquisition and
Wow.
underwrite zoning. Stood in front of planning boards and zoning boards. Did the building permit process. So everything from
What was your biggest hurdle in finding spots?
it was pretty competitive back then. A lot of the other retailers were pretty active. So not only
Like Marshalls and
yeah,
other
and
stuff like
you think
that.
about anybody that's a 30,000 square foot box looking for property across from a regional mall.
Oh, wow.
So any other retailer.
This was the heyday when
yeah.
that stuff was blowing up.
There's a lot of back then. Barnes and Noble was growing. The
Yeah.
Staples and Office Max, all those similar sized stores. Yeah.
Okay. Did you find that the ego of the people on the planning board kind of factored into it? Did you have to take them out to lunch and
No,
that kind of stuff?
everyone was different. It's interesting that at my current job, we just approved a location across the street from the first deal I ever did in Toledo, Ohio, in Cleveland, Ohio.
How about that for
It's 50 feet away 40 years later. And what I remembered about that deal with Toys R Us, one of my first planning board meetings, the other applicant on the agenda that night jumped over the dais and punched the planning board member. And
What?
Yeah,
That's what I'm talking about.
There we go. And I'm like, this is going to be an interesting career. So there was my first deal was a fist fight. Luckily, that was the only one I ever saw.
They forgot to tell you to do
Yeah.
jujitsu or train
Yeah.
before doing that.
So
Cool. So Toys R Us, what was after that?
yeah, I think I was there 6 years or so, and then went back into the supermarket side of the business with Superfresh, which was the Philadelphia banner for A&P.
Okay.
And I did that basically the same thing, sourcing locations. They had a lot of locations in the South Jersey, Philly market that were much older that were looking to be redeveloped. So think about it like tear down a shopping center, rebuild a brand new prototype, put a couple of outlots and other users in. So I did a redevelopment deal in Cape May, New Jersey, and one out in North Philly and things like that. I was there for about 2.5 years, I think.
What year is that roughly?
So that would have been probably 94, 95.
We're in the 90s now.
We're in the
We're in
90s.
the 90s.
Yeah,
Okay,
rocketed.
good.
And then in 96, I joined Home Depot as a real estate manager. And Home Depot had about 250
When did they start?
stores. The first store, I think the first store was around 1980.
Okay.
The founders were working for a company out in California and could not get any traction for their idea of this gigantic home improvement store.
Wow. Now we can't imagine not having it.
Can't imagine. So I think the story is they quit, they got fired, and at the time there was a couple of vacant J.C. Penney's, I think, in the Atlanta market, and they bought those and started. That's why Home Depot was in Atlanta, so I joined them in '90. I believe it was 96, and like I said, I think it was around 250 stores, and I worked there until I think it was 94. I worked there to 2006. I was there about 11, 12 years, and I left. I was the senior director for new store development for the eastern half of the U.S. So everything from Chicago to Maine down to Puerto Rico for new stores, and we were building 250 a year at Home Depot.
How are you guys picking spots? Were you looking at demographics and population growth and stuff like that?
Yeah, they actually had a pretty sophisticated void analysis. It was a third-party market research firm in the Midwest that supported us. And just like you said, we would plot the existing sales from our current network of stores, look at population voids. Fortunately, there were a lot of stores that just did so much volume, you could put one pretty close away. Like they just
Yeah.
could
Absorb
not
it.
do any more
Yeah.
volume.
Exactly.
And some of the highest volume Home Depots were in the Northeast.
Why do you think that is?
Just the population density, the age of the housing market, the new housing growth.
Gotcha.
And Depot did well both in older vintage markets and new housing. Think about buying a new house, how much you spend, even if it's brand new.
Yeah, I
you
know.
know,
Yeah.
so,
Yeah.
That's
especially-
why, you know, when interest rates come down, Home Depot stock goes up.
Yeah, yeah. So 11-ish years was with the company till from about 250 stores to about 2,000 stores.
Do they use the supermarket model? The best stuff is on the perimeter, or is it different?
Yeah, I'm trying to think about their garden center is
Is that the margins?
yeah. There's some good margins in the garden center.
Okay.
Some of the special order stuff, I would think, but I wasn't as much on the merchandising side on the Home Depot. Just kind of cranking out the acquisitions and construction.
Do you think the rise of big box stores coincided with credit cards?
That's a good
Because they
question.
came up like in the same
Yeah.
time, right?
Um,
Like credit cards in the 80s? That's kind of when they were invented, right?
Yeah, I mean, I guess you think about a big box, and it's a lot of them didn't survive if they didn't adapt. You think of the old Caldors and Jamesways and
Yeah.
Kmart's and all, but if you can try and get more than one trip in one box, so whether it's clothes or food or hardware or paint, try and the Targets obviously done
Yeah.
well.
No,
They
yeah.
figured it out, and Walmart's great. So
Gotcha.
yeah.
And where'd you end up after there?
So I moved down into something totally different. I became the senior vice president of real estate and construction for TD Bank, which I was hired in Commerce Bank before they were acquired. So
Did you work at every Fortune 500 company in the last 40 years? What's going on here?
No, that was a lucky move because down in Cherry Hill, just before TD Bank acquired Commerce.
Okay.
And
I remember Commerce Bank.
Yeah, yeah. And so I was there for about 8 years.
Okay.
We did about 250 new bank branches. At the time, we were expanding into Florida, so I did a lot in South Florida. Boston, New York City. They put a big push on Manhattan, which was a ton of fun. Doing, we probably did 25 or 30 locations just in Manhattan while we were there. So
Wow.
that was good.
What was their criteria for finding new locations?
Yeah, just a different version of what we talked about before, but instead of sales, it was deposit dollars. So there's a way to track the amount of retail deposits in the market, and different banks focus on different parts of the banking product. Commerce was very heavy in what they called middle at the time. I'm not going to speak for them now, but at the time they were very focused on small business.
Oh, okay.
So like a mid-size, think of like a law firm or
Right.
a real estate agency.
I remember they were one of the first banks to be open on Sundays
They were
and
Ameri-
open till 8 o'clock at night.
Yeah, their tagline was America's most convenient bank. And when we went in for permits and approvals, to your question before, a lot of towns couldn't process. You're going to be open, 12 hours on Saturday and 8 or 10 hours on Sunday. And, it was. It was the founder, Vernon Hill, came out of the fast food industry. He was a large, I believe, Burger King franchisee. So he tried to take the quick service fast food model and apply it to banking.
Yeah, interesting.
Big drive-throughs,
Yeah,
always
yeah.
open kind of things.
Yeah, it looks like it worked. I mean,
Yeah. There's some good real estate in there. I haven't followed their business in the last 12 years, but
they own all their real estate.
I think they owned about half of it, and they would lease the other half. Yeah.
Gotcha. That seems to be a common denominator among,
Yeah.
McDonald's and places like that. They want to own
Even
the
at,
land.
at Home Depot, we wanted to own 100%, and at TD Bank, we wanted to own 100%. But the developers saw the value in having a leasehold from the credit tenant, where they can, put debt on it or capitalize it and sell it on the open market.
Yeah.
So it's a lot of the owners were hard pressed to sell versus leased.
Who are you buying these properties from? Was it were you negotiating with townships or just private landholders?
Like at TD?
Yeah.
It was private landowners, and they were typically about an acre of land, and like the highway locations, but also like the neighborhood locations. So if you kind of go through mentally, especially in the Jersey area here, a lot of neighborhood locations where you might go in and assemble 4 or 5 homes, try and buy them and aggregate an acre of property, or take an old gas station or an old office building and convert it and not knock it down and rebuild it, but repurpose it. So
Interesting.
yeah.
And then after TD Bank, where were we?
Where I am now? Yeah, I went from TD in 2014 to Getty Realty, and joined them as Chief Investment Officer. And I had a relationship at the time with one of our board members, and still do. He made me aware of an opportunity, and it just clicked. And company was going through some transitions at the time, exiting some of its older properties and trying to find its way with its new strategy. Also, what they hadn't done with any great focus prior to me joining was to take a look at the existing properties that they owned, and is there something higher and better that they can do with them?
Right.
So we've done 34 in the last 10 years, 34 properties where we've redeveloped it from a gas station to anything from a Chipotle to a Bank of America to Chase Banks, or upgraded it to a modern gas station. So kind of repurposed, but those take a long time to get done. So.
How long did it actually take you to repurpose them from start to finish?
Yeah, so everybody says, well, it's an old gas station. The towns must want to just rush it through and get the project done. And it whether you're doing a 2,000 square foot Chipotle or a regional mall, it's the same process. So in the Northeast especially, the challenge on entitlements is anywhere from 18 to 36 months to go through the process.
Wow.
Yeah, so you have to have some real patience and commitment. In a REIT environment, the model works best where you get immediate rent off an investment. In development deals, you're putting money out for 3 years at risk of permits and not getting any rent.
Wow.
So it's a bit more of a risk profile.
It's a long runway.
Yeah.
How many of those gas stations had leaky tanks?
So the older vintage properties, some of the properties we own from what we call legacy, the Getty properties, they've been in operation since the 50s.
Yeah.
And the tank technology today, I don't want to say they can't leak, but it's very uncommon for them to leak. There's so many redundancies and safeguards. Even when the trucks come and make the delivery, the process of hooking the delivery truck to the tank is even more sophisticated. But there was a fairly significant environmental liability that the company owned when I joined the company, and from inheriting properties that may have had some leaks.
There's soil testing. And all
Yeah,
that stuff.
yeah. We go in and do soil testing, groundwater testing, test the tightness of the lines. So we've managed it down quite a bit. It's kind of it went from a focus of investors to a footnote, basically at this point, to our overall business.
Gotcha.
Yeah.
If you can go back, I guess, when you just started into this career path, what's one piece of advice you'd give yourself?
I just got so curious about it when I started. It never. I had no idea coming out of college that you could make a living doing real estate. I didn't know what that was. Now you can get a doctor, a master's degree in real estate from a number of colleges. It's focused education, and maybe there was then. I just didn't know about it. I'd say just it's. You have to be patient. The amount of misses, it's a very low payoff career. If you're expecting a career where you bat 1,000, it's not for you.
Not at all.
Got to be willing to swing.
Yeah. You got to take a lot of chances, a lot of swings, like you said.
A lot of risks.
A lot of risk. And it's not. It's something that if you're looking for like immediate gratification, it's tough. And I've been fortunate enough, I've always been on the corporate side, so I've never depended on commissions, which is a whole nother lifestyle and a temperament to survive when you might have a fantastic year and then a drought. So
yeah, we're ready to retire right now.
Exactly. Let's go.
yeah,
In 6 weeks, right?
I've never had the stomach to transition to that side, but yeah, I would say just be patient, be confident, don't get too frustrated. Early on, I was fortunate enough to get paired up with a few of, at the time I thought older guys. They were probably my age.
Yeah.
Back then, I was 22, 23, and they were getting ready to retire, and I kind of got mentored with them, and just learning from some people that have gone through some of the battle scars and all. And it's a really bad kind of dad joke, but the first guy was like, I got turned down more than an old blanket. Because and at first I'm like, what is that guy talking about? But it's like, that makes sense to me now. But
Absolutely. What was like the one that really sticks to your mind of your mentor to kind of tell you that actually like really helped you to grow at a significant pace?
Yeah, so I had a couple people early on. Just like it's a tenacity thing. You can't get discouraged, and there's that old saying. It's try and get a win-win. I tried never to look at this as a competition. It's more important to get the deal done. I was never one to kind of have that buyer's remorse where I could have got more, or I should have done this. Get a fair deal for both sides. It's amazing how much success is dependent on repeat business.
Right.
Even in my current role, 60% of our deals are with tenants we already have deals with.
Right.
And they want to do more with you. You don't want to leave a deal or a relationship where, like, thank God that's over, I never want to talk to that guy.
Yeah, something went wrong.
Yeah. And you want people to seek you out. I mean, you can't cover the world on all the opportunities. So a lot of success comes from inbound opportunities, and you want to make sure people seek you out on that. So
I know, in our business, we always think of lifetime value, of a customer or a client, because if we have to go out and hunt every day and not getting any referrals, it's going to be really exhausting.
And people forget about you quickly. I'm not sure it's a real estate issue or any business,
especially right now, this day and age. If it's like what's the next thing? Just what have you done for me lately?
I also had a boss one time where, and I'm going to use the term Rolodex, but when we had the Rolodex. He said he would take an hour a week and just call people that he didn't need anything from.
Wow.
And just say, how you doing? What's going on? What do you
how's
need?
the family?
I don't need anything. I'm just checking in.
Yeah.
You stay fresh in people's mind. And if you only call them when you need something, then you kind of get that reputation too.
Yeah.
So
I know there's this guy I follow in real estate, and he's got a certain level of customer service while they're before the deal, in the deal. And the magic of what he does is after the deal closes, he calls them more than he ever did. It's like over delivering after the sale when he doesn't need anything and there's no money. And it's like, so that's like how he sticks out in the marketplace. Just kind of over delivering for the client.
Yeah. Different version of the same thought. Yeah.
So if you could give advice to, I guess, kids just getting out of college or anything like that, 18, 20-year-olds that might be watching this, what advice maybe would you give them?
Yeah, stay tenacious, stay diligent. I'm not sure what the exact right term is, but problems don't go away because you ignore them. I've seen that a lot. Where there's a problem. There's always a problem with a real estate deal. Everyone's unique. When you talk to people, this deal was super hard because they're all hard.
Yeah.
But that's I think why you like the business. And what I've seen where people get tripped up a little bit is they know there's a problem, they know they've got to address it, they've got to call somebody with a change of the deal or some bad news, or you've got to retrade something because something in the dynamic of the deal changed, and they just ignore it, hoping it'll take care of itself. It never does. The problem only gets bigger. The longer you wait, the problem gets bigger.
It really does.
So just take your medicine, make the tough phone calls, and I think to what we just said, I mean, I think people appreciate it, and And again, there's an old saying in real estate. It's a quick yes, quick no or a slow yes is just as valuable. If the deal's not going to happen, people don't want to consume their time.
Yeah.
So just let everybody know it's not going to happen and move on. So
be honest.
Yeah.
So what's next for you? I know you're retiring in 6 weeks or days.
Yeah. So I'm officially retiring my position from Getty. They've been gracious enough to allow me to. There's a couple of projects that'll survive that date, and I'll stay on as a consultant there.
Cool.
So we've got some lease repositioning and some of the development work that I'll oversee for them as a consultant. And I'm out there looking for any type of opportunities where I can add some value from the 40 years of real estate, whether that's project management or consulting. And I'd love to secure some board positions if those opportunities are out there with some companies that need some real estate help. So anything.
Well, Greg and myself are in commercial,
especially
Greg.
Yeah.
So if you have any referrals, Greg will pay. Greg, look at the camera. Tell the people how much you pay for referrals.
I pay very, very well. So depending on the deal, it's between 35 and 50%.
Okay, wow. All right.
Mark?
Well, yes.
You can't do it all, Mark. No, I know you tried, but, but if you want Greg or myself to take anything else, something else we're getting into is business brokering.
Okay.
Buying and selling businesses.
Yeah.
So if you know anyone in that space, we'll love to help you.
Good.
Yeah, we have a lot of people that have been asking what kind of opportunities we have, and we are starting to see a lot of inventory coming through. So if you have anybody that's looking to sell or someone who's actually trying to buy some stuff, we can definitely help you out.
Yeah, what we've a big part of Getty's business is driven by acquisitions. We fund acquisitions through the purchase of the real estate, and the common theme is scale. If you can merge and get scale out of common businesses and leverage efficiencies and just whether it's buying power or branding, it's real important to get to a certain scale. So it's interesting.
Be interesting to see what happens as all the baby boomers are retiring.
Yeah,
and how many of those get gobbled up by private equity and stuff like that.
Yeah, because there's actually a thing off camera, but that we have off market for you. That I think would be a really good opportunity for QSR.
What's we also see is that as the generations, the next generation comes in, they're maybe not as interested in the family business.
Yeah, there's that.
That's exactly what's happening right now. It's like the silver tsunami.
You kind of grew. You grew up in maybe helping your dad or your uncle run a C-store or a car wash, and they made a few dollars and sent you off to Stanford. You come back and you don't want to work in a car wash anymore. So
we also saw possibly how stressed they were.
Yeah, and it's these businesses
working
are
14 hours a day.
Oh, that's a light day for some of these people.
Yeah,
for sure. Good. Well, Mark, appreciate having you on and learn more about your story.
Thank you.
And if you want to reach out to Mark, just DM me or Greg, and we'll connect you with him.
Thanks so much for watching.
Thanks, guys.